You've got another chart here, the Bitcoin relative transfer value breakdown by size. I'm not familiar with this one, so take me to school, my friend. What are you looking at here?
Sure. So all we're doing here is we're just taking all the transactions on the blockchain and then we're just breaking them down by size. So we're saying where is transactional volume, where's transfer volume being dominated based on the size of the transactions. And so what we see is since 2020, we've kind of just been this like perpetual uptrend. Of course, a bit of fluctuation here and there, but generally just been trending up since that time period. A lot of that has to do with institutions being in the market, as well as transaction batching being done by exchanges. And so, again, this is really just showing you that kind of the big boys are running the show, if you will. Larger market participants are really kind of dominating the transfer volume. And then if you go to the next chart, you'll see the same chart, but it's looking at the one we just looked at is looking at transfer volume above $10 million. This one that we're now looking at is transfer volume below $100,000. So these are the smaller market participants, generally retail. And what you'll see is that they've taken up a smaller and smaller portion of volume over the last, call it, year or so. I think this also kind of shows you that there's a decrease in kind of retail, speculative euphoria in the market as well. And that generally, the bigger market participants, the larger transactional volume is dominating the market right now.
Got it. And then when we go ahead and we look kind of at the opposite end, when we look at these transfer sizes less than 100K, that's basically just showing us that it is really the large players, not the small players.
Exactly.
Yeah. So it's pretty interesting when you kind of look at it's impossible to deny this data, right? In terms of what we're seeing. All right, let's talk a little bit about the flows into Bitcoin. I know you've got kind of this like almost like volume or flow chart here. What is this showing us?
Right. So as we talked about, I think part of what's been driving the lackluster of demand for BTC over the last couple of months has just been general risk-off behavior driven by macro uncertainty, whether that's what's going on with Russia or quantitative tightening fears. And so like this is looking at the correlation of BTC to the NASDAQ. And so what you'll see is generally this is kind of spurious, right? We go through these heavy periods of correlation, we draw down, have these kind of like brief decoupling periods. But over, call it the last month or two, we've had a really strong correlation. As you could see kind of on the right-hand side, this is kind of the largest block of correlation in recent history. And so again, I think, I don't want to sound like a broken record here, but for a lot of the reasons we just mentioned, but to break this correlation, I think you need two things. So you either need a traditional finance rebound, particularly the NASDAQ, which would allow Bitcoin to just trade as a high beta asset. Whenever you're in risk on mode, you can start to see these correlations break down as people go out further on the risk curve. So that's one way. If you start to see a lot of the macro uncertainty subside and start to see a rebound in risk on assets, particularly, tech stocks, and just, overall just the QQQ. And the second way would be if we had some type of catalyst that would draw in idiosyncratic flows. So idiosyncratic is just like a fancy word I like to use to sound smart, which just means unique flows to Bitcoin, right? And so what I'm saying here is that, unless we have some type of macro rebound, you're going to need some type of event that forces that correlation to break down to the upside, ideally. Could potentially be, to the downside if you have terrible news, but I'm saying ideally, to the upside, obviously. So we're looking at, several different potential catalysts. We've got things like Russia being rumored to Russia potentially looking to mine Bitcoin, Intel getting involved in mining chips, Google looking to store crypto in their partnership with Coinbase, Apple and Microsoft talking about the metaverse, El Salvador, their bond raise coming up, which I think that'll get really interesting if it's oversubscribed to, as well as rumors of other Latin American countries following El Salvador, making their legal currency Bitcoin. So I think it's a bit foolish to just blindly bet that a catalyst is going to occur, but I do think again, always trying to speak in an if-then format. If one of these events occur, then I would expect the kind of correlation, the really heavy correlation that we've had to risk on equities to kind of break down. And so that's just something to kind of keep in the back of your mind. If we do see one of these kind of catalysts take place, I would expect some type of idiosyncratic flows to then come into Bitcoin. But for now, because we haven't had anything like, that's causing those unique flows into BTC, we are just kind of trading at the hip of equities for the time being.